Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so glad and grateful for life, and thankful to be with you here this morning as we are going to be taking another fresh new look at the financial market. Well, the Harmattan is setting in this part of the world, and we're beginning to have this dry face, dry lips, and the like. So you will see some oily face. So great to have you guys around. I hope you all had a wonderful day, and yesterday was phenomenal as we saw how the US dollar crashed yesterday as a result of the federal interest rate decision, which actually came in just as expected. Everyone has been suspecting that there is likely going to be a rate on change, but due to the CPI data that came in a couple of days ago showing signs of inflation in the United States economy, they splitted that perspective into two, as majority were now being doubtful if the rate will either be raised or left unchanged. But thank goodness things worked out as expected. We already had, especially on the gold, we already had a buy position triggered even before the event happened, hereby giving us significant amounts of profit on that one. Then the same thing also happened on the GBPUSD, though we went in very late due to the technical structures we did identify, but we were able to scoop in some reasonable amount of profit on that one too as well. And the same thing on the USOILSPOT, which actually rose by approximately 2% in the last 24 hours, and we do hope that the momentum will continue, especially after the interest rate decision came in just as expected. So today we will be looking at the current market structure from a technical standpoint using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today. So I encourage us all to stay tuned in so we don't miss out on any of the valuable ideas we will be talking about today as we all gear up for another economic event from the both from the United States and the United Kingdom. So with that being said here, I didn't forget you. For those who are joining us for the first time, you're highly welcome on board. I'm very grateful and glad to have you around with us this morning. I do know you will be wondering what this is all about. Well, the Forex Morning Mastery was born out of the intent of doing follow-up videos of my weekend videos. So during the Forex Morning Mastery, we usually do follow-ups of the videos I share during the course of the weekend. So it's very, very important that you familiarize yourself with those videos, as this will give you an insight into what you will be seeing here. So on a daily basis, gather here as a community in to engage in follow-ups and reviews of any existing positions we have in preparation of both the London and the New York session. Now, the session usually kickstarts about 9:05 a.m. West African time and 8:05 a.m. UTC, and I do recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be talking about today. Now, my aim during the Forex Morning Mastery is simply to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you will become at comprehending our analytical approach, hereby utilizing the information gathered in this community to enhance your own trading decisions and strategies. So once again, you are highly welcome on board, and I encourage you to engage in the comment section. So with that being said here, we will be diving right into the business for today. And as usual, the first thing we normally do is to check on the economic calendar. And of course, for those of you who have been with me for a while now, you know how important this is, as these fundamental factors usually manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, for so far this week, and based on the assets we have on our watch list, we have been focusing on both the United States and the United Kingdom economic docket. Now, we all know this week was laced with a handful of high impact events, which actually affected the market sentiment during the first half of the week, but things are beginning to gain traction, and we are already having a sense of direction as we gradually head into the second half of the week. Now, for today, Thursday, December 14th, we have a handful of impactful events here. In fact, one of them is the most anticipated one, which is the Bank of England's interest rate decisions. And just like we had from the Federal Reserve's interest rate decision yesterday, we are looking forward to an unchanged interest rate, as we expect that the Bank of England, due to the effect of the high interest rates in the economy, they are likely going to be maintaining or leaving the interest rate unchanged. So in that regard, we are going to be looking at how the market participant will be anticipating this event today to see if we can have a pattern or structure that we can use to strategically position ourselves for this event. Then another one that we will be looking out for on the economic from the United Kingdom is the, what's it called again, Bank of England asset purchase facility. Another very high impactful event that is. And for those who don't know, this is a program through which the Bank of England purchases financial assets, typically government bonds, to stimulate economic activity and achieve monetary policy objectives. Now, the impact of the market sentiment is very, very significant, as it signals the central bank's commitment to support the economy, influencing interest rates and overall financial market conditions. Now, we also going to be looking forward to the minute, the MPC vote rate cut, rate hike, and rate unchanged, and of course the monetary policy, which is a comprehensive assessment provided by the central bank, such as the Bank of England, in detailing the economic conditions, outlook, and of course the rationale behind the monetary policy decisions they made today. Now, it's a very, very impactful event which will be affecting the market sentiment as well. Then later on today, we will be looking at the retail sales data coming in from the United States economic docket, and this is another key economic indicator that measures the total receipt of retail stores, representing consumer spending in the US economy. Now, its impact on market sentiment is also very, very significant, as it provides us an insight into the health of the economy and of course the consumer confidence, hereby influencing expectations about future economic growth. Now, if we look at the retail sales data for the previous month of October, it came in at a deficit of 0.1%, and based on what is on ground right now, economists are projecting that it will still maintain that deficit of 0.1% for the month of November. So it really shows that with all expectations at this juncture, that the retail sales data is not really going to be coming up beyond the previous month. So we look forward to see what the actual data will be like for today, and of course look into the current market structure to identify trading setups that we will be using to position ourselves for today's trading session. So with the information we have gathered here on the economic calendar, we will be diving right into the business. And as usual, my my oil chart usually takes quite a while before it loads up, and while that is doing so, I have a couple of comments here. I see you, Torres Master. Good morning to you, and thank you for your narrative every morning. We really appreciate, and thank you for waking the tempo in the house. Thank you very much. Raja BD, good morning to you. Glad to have you around with us too this morning. Trust we all had a profitable day yesterday. Good morning to you too, Kelechi. Just saw your comment dropping in. Thank you very much for checking in on us. So my chart is still not loading. Okay, finally it's loaded. So the first asset we will be taking on this morning, as usual, is going to be the USOILSPOT. And in fact, so far this week, we've done tremendously well, though the week did not really start very well for us, just like it has been doing for us in the last 2 to 3 weeks now. The week usually does not start very well, as we usually take in some couple of losses before we start to get the sense of direction of price action, hereby recouping the loss we incurred and of course making significant amounts of profit in that regard. So far this week on the USOILSPOT, we've had situations where we've bought, we've had situations where we sold, and we have the situations where we kept on selling and buying again, and on both instances price action has moved really well. Now let's look at what is going on this chart from a technical standpoint. How did the week started for us all in this community, and what led to the decisions we made? Now, for those of you who are in any way or probably in one way or the other missed out on my top-down analysis on the USOILSPOT, I encourage you to rewatch that video, as it will give you a background knowledge of how we were able to come up with the key levels and structures we used to position ourselves for this week. Now, if you had missed out, you can check the link right in the description box of this current video, as it will give you a background knowledge of how we got to this point. So you can check it out after the live session today. So we had our key level for this week situated along the $72 level, as you will see right here. And you know how we use our key levels in this community. As long as price action remains below the key level, we definitely want to be looking out for patterns and structures that support the idea of selling that asset. However, if price action at any point in time breaks out of the key level, then we want to be looking out for opportunities to buy. Now, in addition to the key level identified here, we saw how price action was initially confined within the range of $72 and the $71.38 area to emphasize the level of indecision at the beginning of the week. And this, of course, led us into doing some sell positions. Remember, we did sell after price action broke down the support line of that range, as you will see here. Then it also broke down this one as well for a while before the bullish momentum set in to take us out of all the buy position with a reasonable amount of profit, or at a worst case scenario, break even, depending on where you have placed your stop losses. Now we had another sell position around this area, hoping that price was coming back to retest the structure, but that did not do well at all, as we were taken out of that position in a loss. Then remember that we also had a buy stop order triggered at the breakout of the $72 area, which of course did not last long as well, as we saw price drop to the downside, taking that one out in a loss too as well. So we had a couple of losses at the beginning of the week, but we remained resilient and maintained our analytical approach to the structure. And of course, we did see another opportunity to capitalize on more opportunities as price action broke down the support line and of course broke down the ascending trend line we spotted here on Monday, and one of the agreements is that if price drops below the ascending trend line and that level at the $71.38 area, it will be a beautiful opportunity for us to sell. And in fact, if you had missed out on the first breakdown, price indeed came back, retest the structure, and then continued the bearish momentum to the downside. And we also had the privilege of maximizing the bearish momentum. Remember, we also added more positions at the breakdown of the $71 area as we were able to scoop in. I think we were able to scoop in, let's see how many pips that was. From this point, we rode it all the way there, over 300 pips before the bullish momentum came in. Then the second one also scooped in over 250 pips before the bullish momentum came in. And if you remember vividly, during our live session yesterday, I mentioned that we should move all our stop losses on that sell positions to anywhere around the $69.20 zone to ensure that we protect the sell position just in case buying opportunities sets in. And during the live session yesterday, we did identify a simple setup that we said we will be using to guide our trading decisions for yesterday. And of course, I did give updates as regards to this, as I shared an update, I think, prior to the first hour of the New York session, that we will be using this range to guide our trading decision. So we marked out the $69 area, where we said if price action ever breaks out and retest the structure, we will be looking out for selling opportunities, and we wouldn't be selling unless price action breaks down the lowest point for this week at the $68 level. Of course, price never came close to the support line, so that negated any idea of even thinking of selling this particular asset. So we were right on spot to capitalize on the bullish momentum. And in fact, if you had missed out on it, the market did come back a couple of times to retest the structure and incited this uptrend situation. And in fact, if you are taking advantage of this opportunity, well done, and kudos to you for being on standby to capitalize on this move, as we currently have about 150 pips running in profit right now. And immediately when I begin to see some interesting development happen here, I did updated us yesterday night before I went to bed that the $70 level is going to be another beautiful opportunity to add more positions to our existing trade, and this was exactly what happened. If you had capitalized on that one too as well, you would currently be having about 50 pips running in profit on that second position at this point. Well done, and kudos to everyone who had been on standby to capitalize on this move. Now, the next thing we want to be doing right now is to ensure that we protect all buy positions at this juncture. Remember, we are looking forward to another economic feature from the United States later on today, which could likely incite some volatility in this particular market. So it makes quite a lot of sense that we move all stop losses to secure this current position. And if you would ask me, it is important that we give enough breathing space for price action to move around. And if that is going to be the case, I'm of the opinion that anywhere below the $69.80 level, and let me say the $69.50 area, seems most appropriate to move all stop losses to. Let's secure this position at this juncture, and let's see how the market will play out from this current area. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Are we going to continue buying the USOILSPOT, or are there chances that sellers could come in at any point in time? Well, based on the technical structure here, we have the potentials of sellers also coming in. So we are going to be talking about this in a moment. But before we do, I want us to quickly look at the fundamental factors that are really affecting this market sentiment. And first of all, the first one on the list is the fact that this asset here is a US denominated asset, and obviously anything that happens in the United States economy is really going to be affecting this asset. Now, yesterday we witnessed the Federal Reserve's meeting where they decided to maintain the interest rate and leave it unchanged, just as expected. Everyone had already expected it. And of course, prior to this event, we saw how the momentum in the US oil spot market reduced, as we can tell that majority in the market were looking forward to if the interest rate will be increased or maintained. And as soon as we saw the the sustenance of the interest rate at 5.25 stroke 5.5, the market began to gain some traction into the Asian session. Then another latest development from yesterday was data from the Energy Information Administration, that is the EIA, which disclosed an unexpected drawdown in US crude oil reserve, marking a significant 4.3 million barrels decline from last week's trading activities, let me put it that way. And this decline is very, very significant, as no one expected it, as it all surpassed the 650,000 that was expected. So this is a very huge one, and what this simply tells us is that there is a increase of demand in oil in the United States. And when there is an increase in demand, what do you think happens to the market? Of course, price will continue to rise. So this is one of the reasons why I think that we begin to see some traction going on at this particular point in time. Now, despite the drawdown, the US crude oil inventory still remains slightly above 440 million barrels, so they still have a lot indicated right there. Then another thing that could be affecting this oil market is the situation in the Middle East as well, as we begin to see increasing threat from the Houthi, the Yemeni-backed terrorist group, as regards to the Red Sea, that they will be attacking any oil vessels going to the Israel's economy. Now, this is another development that may likely affect the supply or disrupt the supply of oil from the Middle East as well. So all of these are hinting towards an uptrend situation, that is disruption of oil, increased demand in oil in the United States. So all of these are screaming bullish at this particular point in time. However, it is not all the time the market participant react in this manner, depending on how the key players want to run this market. So let's look at the technical perspective, which will of course reveal to us the psychological process of market participants at this point in time. Now, if we go back into the chart and look at the structure closely, remember that we had this zone here broken to the downside at the beginning of the week. That is that area between the $71.38 level and the $71 area, which was broken by this engulfing bearish candle all the way to the downside. And not only that level was broken, but the ascending trend line we spotted here too was also broken. Now, with this situation here, we do expect that whenever price action breaks down a key structure like this, we expect that some point in time price may come back, maybe to retest the structure or even retest the ascending trend line before maybe inside another downtrend scenario, or probably continue to the upside. And as it is right now, the path of price action is gradually approaching that zone, as you will see right now. How will it do around this area? Will it get into that structure, retest it to join a decline to the downside, or are we going to be seeing a breakout of the zone to inside more buying opportunities? So at this point, I already have a buy stop order sitting above the $71 area with the hopes that price action will break out of that structure. Then I also have another one at the $72 area, so we shall continue to buy this asset. But we want to take into consideration the crucial nature of the zone. So as soon as price action gets into this area, maybe close to the 71 or around the $71 area, we move all stop losses again and secure the position, maybe above the $70 area, lock in the profit around that area while we wait and see how market participant will react to the zone. Now, if selling pressure persists below this area, then we might likely be seeing another opportunity to join a decline to the downside. That is, if we begin to see that buyers are finding it difficult to maintain a momentum above the $71 area and price action gradually transitions into a reversal pattern, maybe a double top, head and shoulder, or a rising wedge, whichever case it may be, then we do want to be getting ready to sell. However, if price action breaks out of that zone, that is, breaks out that level and probably retest the structure and continue buy pressure persists, like higher highs and higher lows, then we do want to continue to add more buy positions to our existing trade. So that is how we shall be guiding a bullish momentum on this particular one today. So let's see how the market will play out. We still maintain a bullish bias here, and at this point I'm not seeing any reason why we want to consider selling at all. So I wouldn't be talking about any bearish expectation at this juncture. So let's see how the market will play out with this area. Within the next 2 to 3 hours, we should be able to get a significant signal that will guide our trading decisions for today. So ensure all your positions are well secured at this juncture while we wait for new trading opportunities from this area. So these are my views on the US All Spot for this morning. So I encourage us all to mark out these levels on our chart, as we will be needing them to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section, and trust me, I'm here and willing to be of help in that regard. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset, and you can use that time as well to mark out these levels on your chart. All right, so I see you there, Eric Mudavadi. Good morning to you. Glad to have you around. Adini Babalola, good morning to you. Glad to have you around with us this morning. You're saying why you've been... I didn't get that. Why? I'm not sure I'm getting... Okay, hold on a second. I'll check it from here to see what you are talking about. Why? I probably think you mean why have I not been having the USD JPY, right? I hope that's what your question is. Well, that's a very good, valid question there. Well, I haven't been trading the USD JPY in the last couple of months now, though I'm beginning to revisit the chart in the last 3 weeks as I've been working on that particular asset behind the scenes with some of my clients. And I think I will be including it into our watch list maybe from next year, as I've stopped trading the USD JPY in the meantime. And the reason why I did that was simply because of the sensitive area we were in the last 2 to 3 months, which was more of an all-time high, and the fear of the the fear of the intervention from the Bank of Japan was actually making that market environment very choppy and very indecisive at that point in time. So I felt it wasn't comfortable for me to navigate that market in that kind of scenario. So I stopped, and though I've been monitoring it behind the scenes, but since we're about to run into the end of the year, I just decided to stay clear of it, and then let's see what happens at the beginning of the year. So that is simply the reason why I have stopped including it into our plans. I hope I answered you. Adeni Babalola. All right, so in the absence of no further questions, I do want to assume that we are all on the same page, and in that regard, we shall be moving right in to the next asset on our watch list. So please stay tuned in. All right, so in the absence of no other questions, we move on to the GBPUSD, another interesting asset on our watch list for today. And in fact, we saw the bullish momentum happen yesterday, of course, due to the interest rate decision that came in unchanged yesterday, and amidst the backdrop of a dovish Fed pivoted optimism in the market and surge price, leading to trigger 3 of our buy positions, and we currently have about over 120 pips running in profit right now. Now, the US dollar at this moment is considered to be very weakened, and we do want to capitalize on that opportunities as market participants eagerly anticipate the Bank of England's interest rate decision, which is coming up later today, for more policy cues to guide the direction of price action. Now, it is widely believed that the Bank of England is expected to maintain its key interest rate decision, its key interest rate today at 5.25%, which is what everyone is looking forward to today. Let's see if we are going to be surprised at what will come out. Will it come out just as expected or even beyond expectation? But it is not likely we are going to be witnessing any rate cut today at all. Now, another thing I would also like to emphasize here is that the United Kingdom economy contracted by a larger than expected figure of 0.3% in October, which we saw from the GDP data a couple of days ago, and this also can be taken into consideration, as well as we might likely be seeing we expect to see some negative traction in that regard, which actually we saw during the first 2-3 days of the week, as we saw, and that led into this choppy scenario that we saw during this particular phase in time. But I don't think that should really affect the decisions for today. So if the if the interest rate decision remains unchanged, I'm of the opinion that price action may continue to rise to the upside. Now, let's look at this technical structure. Let's look at this market condition from a technical standpoint and what really led to these decisions we made during the course of this week. Now, at first, during the first 12 hours of the week, it was more of a consolidation phase, as we saw price action confined within the 1.25580 level and the 1.25558 area. I hope I called that out correctly. Let me see. 25350 level. Sorry about that. So we had a range right here where price action was oscillating within, and then we noticed besides the range, we also noticed that price action was sitting on that ascending trend line we spotted on the higher time frame. Now, for those of you who have not watched my weekend video on the GBPUSD, I think it is very necessary for you to watch those videos, as it will give you a background knowledge of what we are really talking about here on the 1 hour time frame. The links are right in the description box of this current video, so you can go ahead and check it out after the live session. So we saw price action trading just right above that ascending trend line, and due to this reason we maintained a bullish bias, looking out for buying opportunities at the breakout of the 1.25500 level. And in fact, we saw multiple breakouts of those structures at that point in time. Price broke out here. We saw the first breakout, price moved about 35 pips thereabout. We saw the second one right here, moved about 30 pips, and we saw the third one here during our live session on Tuesday. Price broke out of the structure. Then one thing we mentioned on Tuesday is that due to the continued selling pressure around the 1.259 area, which has led into the series of lower highs, that we may likely be seeing some selling potential happen around this area. And the only condition that will make us sell was for price action to break down the ascending trend line and, if possible, retest it to join the decline to the downside. And in fact, in the last Tuesday and Wednesday, we were actually in a sell position, which was doing fairly well, let me say. As at yesterday's live session, we had two positions running with about 35 pips on the first one and about 20 pips on the second one. So we had roughly about 55 pips running in profits during our live session yesterday. And what we agreed yesterday was to move all our stop losses to secure that current sell position. And I did emphasize that this area here had been a strong buying niche since last week Friday. And in addition to that one as well was the 1.25 area, which happens to be our key level for this week. Please watch my video on the GBPUSD as I talked about this in detail on why we're having the 1.25 as our key level. Now, I did mention yesterday that the only reason that I can feel comfortable in a sell position is for price to break down the structure. I told you yesterday that despite the fact that we were in a sell position, the potential that buyers could still take over this market is still very, very high. And that only if the breakdown retest of the 1.25 happen, then can we feel very, very comfortable in a sell position, which of course never happened, as we saw how the market reacted to the Fed interest rate decision. In fact, we missed out on a lot, as I had my buy stop order around this area yesterday, and I think we had about 3 buy positions. We had a buy stop here, we had a buy stop at the 1.259, and of course the 1.2600 area, triggering about 3 positions, as it's all is currently running in profit at this point. And for those who are joined early enough, well done to you for capitalizing on that opportunity. So right now we are in a reasonable amount of profit on the GBPUSD. Well done to everyone who had capitalized on this opportunity. Now, the next thing we want to be doing right now is to ensure that we move all stop losses and secure the current buy position, just in case we do know that some volatility will be happening today, as everyone gears up for the the Bank of England's interest rate decision, and of course the retail sales data from the United States economic docket today. So I will be suggesting that we move all stop losses to somewhere around the 1.26 and 1.259 area. Let's give enough breathing space for price action to move around at this point in time. Then in addition to that is the fact that price action still remains above this ascending trend line, still makes things still makes this bullish outlook very valid at this point in time. So as long as price still remains above this ascending trend line, we will continue to maintain a bullish bias. Now, with a well secured position at this juncture, how do we intend to manage our positions going forward? Well, I maintain a bullish bias like I said earlier, and the highest point price action has been for this week is right now at the 1.26500 area, making that area our new resistance line, where the breakout retest of the structure will be welcoming more buy positions. So I did update us this morning during my commentaries on both my TradingView and Telegram platform that we will be adding more position if price action breaks out of the 1.26500 level. Now, one thing I also want to call our attention to as regards to the structure is the resumption of selling pressure as soon as price tested the 1.265. Now, we cannot negate the idea that we could be seeing some profit-taking activities in the meantime, in anticipation of the Bank of England's interest rate decision, which could result in price action maybe retracing back into the ascending trend line before another wave of bullish momentum start kicking in. So right now we still maintain a very strong bullish bias unless price action does break down, retest the ascending trend line to incite a sell-off at this point in time. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple view here. We still maintain a very strong bullish bias here. Let's see how the market plays out in the next couple of hours, and I will be with you in the comment sections as always. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds waiting for your comments or inquiries before we move on to the last asset on our watch list for today. You are very much welcome, Adeni Babalola. I just see you, Princess Aboluokwe. How are you doing? It's been a while since I saw you with us. Trust you are doing very well out there. I'm glad to have you around with us this morning. All right, so in the absence of no questions, I will take this as a positive confirmation that we are all on the same page, and in that regard, we shall be moving on to the final assets on our watch list for today. So the final asset on our watch list for today is my favorite asset, which is the XAUUSD, popularly known as the gold spot. And in fact, we did tremendously well in the last 24 hours, scooping over 1,400 pips in profit on this particular asset. In fact, we were already in a buy position before the interest rate decision came in yesterday, as we saw price action continue to maintain right above that descending trend line we marked out here yesterday. It was a phenomenal day for everyone. Well done to you guys. Now, as it is right now, price action has surpassed that psychological $2,000 mark, which happens to be our key level for this week. And right now, will price action maintain the bullish bias from this point, or are we likely going to be seeing some profit-taking activities happen today to incite a downtrend scenario, maybe back to retest the $2,000 mark before another wave of bullish momentum happen? And like I said earlier, the interest rate decision from yesterday, where the Federal Reserve maintained the interest rate at 5.25 stroke 5.5%, has really weakened the US dollar, at least in the meantime, and of course the Treasury yield. And this, of course, as long as the US dollar and the US Treasury bond is weakened, this is a open window for the safe haven assets such as gold to thrive. Now, with this situation and coupled with the comment from Jeremy Powell yesterday, where he mentioned that the Fed's willingness to cut rates even without US economics recession in 2024 resonated with market participants. And as a result of this, I'm not thinking that the gold will go down, at least in the meantime, due to this recent development at this point in time. But today, our focus will remain still on the US economic data. We are looking forward to the weekly jobless claims, which is an insight into the labor sector of the United States, and of course the retail sales report, which will be published later today, and of course guide market movement. Now, given this landscape, what is going to be the first thing we are going to be doing? First of all, for those of us who still have a buy position running at this point in time, kindly move all your stop losses to secure this current buy position. And from what we have here, I want to be suggesting that anywhere below the $2,028.50 level seems most appropriate. As you do know, we want to be giving enough breathing space for price action to move around, just in case we might be seeing some retracement or choppy situations before another wave of bullish momentum happen, and this will help us to still remain in this particular market. Now, that reminds me, for the sake of those of us who are not part of our earlier sessions, let's quickly run through how the week started for us all and what led to the decisions we made. So at the beginning of the week, it was more of selling the XAUUSD, as we had a couple of sell positions triggered after price action broke down of that range we identified. So remember, at the beginning of the week, we saw price action confined within the range. In fact, the week started on a bearish note as we saw price drop into the support line of that range, and we positioned ourselves at the breakdown of the 1,995 level to capitalize on the first sell position for the week. Then we also added more positions at the breakdown of the $1,991.50 level. So on this single move, we were able to make about 150 pips after price did take us out of that position. So it was a profitable start to the week on the USOILSPOT, on the XAUUSD, sorry. Then we had a buy position around this area, which was triggered and of course went into a loss. Now, during our live session yesterday, we begin to notice that buy pressure is beginning to become evident around the 1,976 level. So as soon as price got into the structure, we saw buy pressure resume around that area. We saw the same thing happen around here, though we had a breakdown here which triggered a sell position for us but did not do very well, as we got taken out in a loss on that one after buy pressure resumed around that area. Now, to guide our trading decisions for yesterday, we did identify a descending trend line after connecting the series of lower highs. And what we said here yesterday is that if the buy pressure persists and breaks out of the resistant line of this range we identified between the 1,983 and the 1,976, it will be an opportunity for us to join an uptrend move. And as you will see, we saw price breakout, retest, and boom, price just continued to the upside, scooping in over 1,400 pips from multiple entries. Remember, we marked out multiple levels here, like the $1,991.50 level. We also marked out the $2,000 area, then the $2,007.50 level, and of course the $2,035 area, where we placed our buy stops orders in the hopes that price will break out those structures, which it actually did. So once again, well done and kudos to everyone who had capitalized on this opportunity. And I do hope you've moved your stop losses accordingly to secure this current position. And right now, how do we intend to plan for today's trading session? Well, we already have a position triggered at the $2,035 level. Let's see how far this momentum will go. And remember that all stop losses shouldn't be less than anywhere around this area. So let's ensure that we give enough breathing space for price action to move around. So I still maintain a bullish bias here, but if price action breaks down the $2,029 area, I would like to give this a red color. So if price will break down the $2,029 area, we might likely be seeing a temporary sell-off, which could be as a result of profit-taking activities at that point in time. So if price action drops, we might likely see something like a retest of structure to incite a downtrend scenario, maybe back into the ascending trend line that was broken yesterday. But it might not get to that far, but we have levels which we can use to guide our decisions. If we see buy pressure resume around any of this level, that is the $2,007.50 level, the $2,000 area, the $1,991.50, or the $1,983.50. If we see buy pressure around that area, we could start considering an uptrend situation. But I will be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due if price action ever comes into the structure. But I personally, if you would ask me, I doubt if price will break down the $2,029 level. But if it does break down, if you're a counter trend trader, a scalper, you might want to capitalize on that opportunity. But as it is right now, we maintain a bullish bias, and let's see how far this momentum will go. And if anything new comes up, I will definitely give you updates as at when due. Now, another thing I noticed here is the highest point where price action has been, which is the $2,040 area, which could also be another opportunity to add more positions to our existing trade. So let's mark this level how $2,040 area. It's a psychological level considering the round figure of that price. So I'll give this a blue color, and then you can see we have a range already where price is currently trading between the 2040 and the $2,029 area. Now, if price action breaks out of the 2040, this could also welcome more buying opportunities. So for those who had missed out on all of the positions we had in the last 24 hours, you can look out for the breakout retest to join an uptrend move. And if you were part of the profitable journey so far this week, you can just simply leverage on some of the profit you had made so far this week and place a buy stop order above the $2,040 area. So on the XAUUSD, I maintain a bullish bias until the market structure says otherwise. So let's see how the market will play out, and I will definitely be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due. So these are my views. If you have any questions, feel free to let me know in the comment section for today. So that reminds me, if you have found this content helpful and useful in making your independent trading decisions for today's trading session, I would really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them. And of course, this will also lead to growth of this community. Thank you very much as you do so. For those who had already clicked on the like button, thank you very much. I really appreciate. And for those who are yet, kindly click on the like button, and thank you very much as you do so. Then I already dropped the link to the XAUUSD live window right in the comment section. It is pinned at the top of the comment section. So I look forward to seeing you right there. You want to click on that link, click on the notify me button so you can get notified as soon as we come on live. Now, for those who don't know what the XAUUSD live window is all about, well, this is a platform that was born out of popular demand from members of this community, where we usually come together during the New York session to monitor real-time price action on the XAUUSD through the first 5 to 7 hours of the New York session, depending on how the trading activity is like for that particular day. And it usually kickstarts about 5 to 10 minutes into the New York session, so you do want to be part of that session as you wouldn't regret to be part of the experience. For those who joined us for the first time, I do hope you are able to gain one or two things today. And of course, if you do, you want to be part of the subsequent editions, as the more time you spend with us in this community, the better you will become at understanding our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So I look forward to seeing more of you guys tomorrow, same time, 9:05 a.m. West African time, 8:05 a.m. UTC. So it's on this note, I would like to wish us all the best of luck, and always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So in that regard, you do want to be having a well-defined risk management strategy that you want to consistently adopt all through all the positions you take on from your portfolio. So with that being, I can see a question here from Simon Bayon. Says, thinking there will be a retracement after the news. Is that a question or a statement? I think that's a statement, it's not a question. I was thinking there will be a retracement after the news. Well, we talked about the possibilities of a retracement, and we already marked out the $2,029 area as an area to look out for certain opportunities in this particular market. So we never know what will happen. We never know how the market participant will react to that event. But what we do know is the hedge we have in the market, which will make us strategically position ourselves for the next move. So we already have structures which we are using to guide our trading decisions for today, as our center of focus for today is basically between the 2040 and the $2,029 area, where depending on the direction of the breakout would give us an insight into where price is likely going for today. So let's mark these levels out, as it will be guiding our independent trading decisions. So I think I made myself clear there, Bayone. All right. So in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, we shall be rounding off for today's trading session. And I look forward to seeing you guys right in the comment section of both my Trading View Telegram platform and of course during the XAUUSD live window, as we continue to monitor price action. Trade smart, trade consciously, and do have a wonderful day, everyone. Bye-bye.